I just bought the 21 close. We had a low 2 sell 18, but bottom of a large trading range on the daily chart, and coming after three bull bars 15, 16, 17, and 16 was a strong bull bar. So failed low 2, got a breakout and follow through above the moving average. I think we're gonna get one more leg up from bar 20. So just exited there on 22 for a 6 point loss. I was seeing it one way, the bull case. I mean, we're in a bear trend, so I should have been more aware of that. But definitely reasonable to assume that this is a third push up as well, and a second leg up from 16. So minor reversal and parabolic wedge, testing the 6 high. I think that was a mistake to buy that. So I took a 6 point loss there. But yeah, I think I should have still been seeing the bear case there, not the bull case. Just bought the 36 low. Really strong breakout, lower major trend reversal. Expecting a test of the 21 low. Willing to buy more at the 35 low. So this situation here is similar to these examples. We have a higher low major trend reversal, and then we get a really strong breakout, deep pullback to test the bad buy signal. But that strong 2-bar breakout often starts the higher low major trend reversal. And maybe that becomes a full trend reversal, but sometimes it just becomes a trading range. But I think that's a reasonable spot to expect a possible start of a major trend reversal. Here's another example. So test up to the moving average in a tight channel, and then a higher low major trend reversal confirmed by the 3-bar breakout. Here we got a deep pullback. Didn't quite get to the 31 low, but got a 50% pullback. And then that just led to a trading range and then trend resumption down. So here, I think because of the overall context on the daily chart, we're testing that low after a really strong breakout. So expanding triangle, possibly buyers below this low, and maybe test back up to the moving average. So it's a reasonable spot to get some kind of bounce. And maybe we only test up to the 21 low. That's also possible before getting trend resumption down. I really regret that first trade. Just so clear in hindsight that it's not a good buy. It's a sell. If anything, it's a sell. I'm glad I realized on the next bar, but I just have to be quicker to realize before I pull the trigger on the trade. It's just really obvious that it's a parabolic wedge, bear flag, first moving average gap bar in a bear trend. It's just super straightforward. And I think I'm thinking so much about the details of the bars that I'm kind of losing sight of just the basics. So I really got to find a way to integrate those two things because I'm making some silly mistakes. But glad to only take a 6-point loss there and realize quickly, otherwise I would have taken a full loss. The difference between these two examples and today is that these are both accelerating up into the moving average, and so it needed a deeper pullback. This one as well, accelerating up into the moving average. Today we actually got breakout and follow through above the moving average, so a little bit stronger today. So IOI 38, holding above the moving average, but coming after technically a high one buy, coming after a strong bear bar 37. So I'm not sure if there are buyers there to get continuation up. We may need to test above and then come down, form a second entry buy. But so far looking good for a second leg up from 34, 35, 36. So 39 is a second entry sell for the bears, 36, 39, but coming after a really strong bull breakout in a good location for the bulls. So I think bears who sell below 39 will be stopped out above 37. Hoping to get filled on that scale in order, and then I'll look to target the 37 high. So second entry sell for the bears, 36, 39, but it is a breakout pullback sell, but it's coming after a really strong breakout, 34, 35, 36. So I expect that the bears will fail here, and that we'll still get a second leg up from this breakout, especially considering the location and the context. This blue line here is the low of the trading range on the daily chart, so it's a reasonable area for a bounce. And we still haven't worked off this momentum for the bulls. I don't think 38 was enough of a second leg, so I still think we're going higher. Unfortunately, it didn't get filled on my scale in order, so it trapped me out of a pretty decent profit. If this ends up going, that would have been a pretty good entry there. So I just went one tick below the 39 low which is the second entry sell for the bears. And we'll see if bears exit there and we race up from here. So I ended up exiting at the 42 close. It closed right at the 21 low, and I was deciding between the 21 low and the 21 close, and I think 21 low was more obvious as a target, and we closed right there as a bigger bar, so also possible climax. So I decided to just take it off there for, I think it was a little bit under 8 points. Just bought the 67 low, looking for a second leg up from 65 to 68. Strong enough push up, low in a trading range. I thought we'd get a second leg up. It was a tight channel down for the bears, so I thought this push up was minor. So I wanted to buy in the lower half. That's why I didn't buy the 68 low and opted to buy the 67 low instead. So it looks like I'm going to get stopped out here. Not sure what to say about this one. I thought that was a reasonable area to look to buy. Trading range, double bottom bull flag, 40, 65, strong push up on up to 70. I thought higher low and probably second leg up. So, yeah, not sure what to say about that one. So stopped out there for around 7 points. Yeah, just rough week. Some obvious mistakes, but then some of them are like this where I'm just not really sure if I'm just reading the market wrong or if, I don't know. I really don't know about that one. I'm gonna call it there. So finishing down 7 points on the day, so $37 after commissions. Yeah, frustrating week, but I'll be back next week and hopefully make some progress.